Hi everyone, we are back with a new market call, or better said, a market sentiment call. Yes, a new episode with Anthony from Economy. Welcome, Anthony. How are you?
Hey everyone, yeah, doing very well. Thanks, Tim. Thanks for having me back on the show.
Yeah, very nice, and I'm very happy to have you back on the show also. The topics that we will cover today with Anthony are mostly an update about the halving, the long and short ratio of Bitcoin, also where Ethereum is in a cycle with the Elliott waves, the similarities with the 220 bull run. Also a sole update of the previous call we did with Anthony. Then also the similarities with the DXY, or the correlation with the DXY and Bitcoin. And then a sort of heat map from the S&P 500. This is for me the most important. We had also some important topics last week. We had a rose. Bitcoin climbed actually 5%. Before the CPI readings, and after that we had we went back again to initial price, what is very sad to see, because everyone was happy after that 5% climb, but yeah, it is what it is. Then Ethereum follows a similar pattern with Bitcoin. It's actually the same, and Anthony will cover also a lot of Ethereum today. The altcoin and the most sector updates. DeFi had a rise of 6.4%, and Web3 lost 1% in average. Also, the meme coins had a nice run, in particular Pepe and Shiba Inu. Pepe did 25%, is a lot, and then Shiba Inu 14%. Hydra Hashgraph did also very good. It did 70% after it partnered with the Fed now for its systems. It's also very nice to see. And then we had also a little bit hype with Torchain. It performed the best of all the assets previous week. It hit an increase of 53%. Ahead of this launch of the TorFi lending protocol. This was for me the most important news about the altcoins, Bitcoin and Ethereum. When we look to other news and more the regulation base, other news like Coinbase hit its mainnet, the base mainnet, with more than 100 application, decentralized application for clarity. Visa introduced also an experiment on Ethereum to pay gasoline costs, also very interesting. And then we saw also an outflow of 73 million on Huobi exchange for some speculation, some FUD of arrests, like we did also saw on Binance with the FUD that we saw there a couple of weeks ago. Also, for the regulation stuff, the SEC considering appealing a ruling on XRP. What is very interesting to see. They were bad losers, I think. Also, SBF was jailed by court decision. Dus he had also his how do you say it, Anthony? He deserved.
His bail was revoked.
Yeah, indeed. But yeah, that was the most important what we saw previous week. Now we're gonna start with the first thing, and that's actually an update of the halving of Bitcoin. What can you tell us, Anthony, about that?
Sure. Well, the halving event is still estimated to be around May 2024. So we're now, under a year until the next halving event. I have a couple of interesting charts to share with you, Tim, today. So I'll just present my screen.
Yes, perfect. Yeah, and then you have also the BlackRock ETF filing that maybe will be approved in that time. It's also interesting to see that it is combined. Okay, here we see it. Yes, thank you.
So I believe it was just this morning, the SEC has actually delayed ARK's Bitcoin spot ETF application. So that's been pushed
indeed.
back as well. So you see the SEC are trying to push back and also push back against the XRP ruling, which is interesting to see. But I think before we get into the halving and the charts, I think we'll just touch on the institutional inflows and outflows from the market. So you've actually had, not including this week or the previous week, we had 3 consecutive weeks of institutional outflows from digital asset investment related products. And if we actually go to this week's data, we can now see a small rebound. So we've actually had 27 million of inflows into Bitcoin related products, 2.5 million into Ethereum, 0.1 into Litecoin, 0.4 into Solana, and 0.5 into XRP. Interestingly, XRP, Solana, Litecoin are the only coins that have positive inflows on a weekly basis, month-to-date basis, and year-to-date basis.
Nice.
Those 3 altcoins are clearly a favorite at the moment in the market. Now, if we go to the halving chart or Bitcoin's chart, and we'll update here, there's not really been a significant update since we've last spoke to him. We've had a month or 2 of Bitcoin trading in between a range of, let's say, 31,000 and probably 29,000, around that area. So we're seeing a bit of a pullback in the market. We're seeing institutional money flowing out of the market with profit taking, but it's not considerable outflows, where there's a fear of a decline in the market.
Yeah, so indeed.
What we're generally seeing is probably profit taking and people thinking of securing some short-term profits in the market. And if we just zoom in a fraction, we'll notice that Bitcoin's actually trapped between the 100-day moving average on the weekly time frame and the 200-day moving average. So the range is getting tighter and tighter, and I think this is similar across Ethereum as well, and also BNB. So a lot of the major altcoins are kind of trapped between this kind of small range, which is getting tighter and tighter. But if we go to the halving spiral chart, courtesy of the Rational Root, we'll notice that Bitcoin is still following the trend going into the halving event. It's estimated that the next all-time high will occur roughly 78,000 blocks mined post-halving, which generally is around 1.5 years. So it generally takes 1.5 years to mine that many blocks. And if we go back to Bitcoin's charts, essentially what that's telling us is post-halving, which is in the red line here, end of April. We're looking at 1.5 years post-halving, which should take us to around October, November, December in 2025.
Yeah,
for the next bull market peak.
We have the same opinion, exactly the same opinion. October 25 is our target for the next all-time high. Yeah.
Of course, we don't know the macro events which could change the environment, but based on the past projections, you look at the last 3 bull market peaks, they've occurred 1.5 years post-halving. They've all peaked between October and December. So that's a strong indication that is the current trend in the Bitcoin market. So nothing major to report in terms of any major new trend developments in the Bitcoin market. We're still in an accumulation phase, and we're still moving as we should be doing so into the halving event. What I wouldn't be surprised is if, taking a look at the last bull market, we had this big crash down, a big correction in the market during or just prior to COVID, before the run higher, which would have eliminated a lot of the weak hands in the market. So don't be surprised if we do get a sharp retracement in the Bitcoin market. I'm seeing it as an opportunity to accumulate more Bitcoin at lower levels. So as long as we're staying inside this trend to the upside, and as long as no key structures are broken to the downside, I'm still remaining in the bullish camp going into the halving event.
Yeah, okay. And do you have a specific price level in your mind where we can go when we have a retrace or like a Black Swan event like in 2020?
Yep, sure. Let's just identify those levels on the chart. So if we go down to the weekly time frame,
We
there's a
have
key.
22 we have in mind and 25 for us.
Yeah, I think key support, previous resistance level is an obvious one for me, but it's already kind of touched that level at around 25,000. If we do get a breakdown from there, we could be looking at a retracement anywhere kind of 18,000 to 20,000. So we have another support level coming through here as well. So you're looking at 21, 22, and then beneath that, you're looking at around 18,000. So, we can watch that as the market goes down. One thing that I would say is slightly more positive is the last 2 weeks, we've seen a major rotation into the US dollar index. We've had a sharp bounce on the US dollar index.
Yeah, indeed. Crazy, yeah?
Yeah, it's been going very quickly to the upside, whilst equities are kind of stalling somewhat. We're seeing some profit taking from those major tech stocks like Nvidia and Apple, and we're seeing a rotation into the US dollar. However, cryptos have held up relatively well, considering the DXY has strengthened considerably. So we're still seeing Bitcoin trade near its yearly highs in that kind of 31 to 29,000 range, which is very promising for the Bitcoin market, because usually there's a major inverse correlation. A stronger dollar is very negative for the cryptocurrency market.
Yes, you see now a decorrelation. It's very important to see that Bitcoin do its own thing. And that it is decoupled from other risk-on assets like the S&P 500, and that's actually a good thing, because the S&P 500 is very high at this moment, very overextended, and that gives us some hope, I would say, to get higher with the Bitcoin chart because of the decoupling, maybe.
Maybe. I think equities are due a reasonable pullback. We've had a substantial rally this year across equities, despite interest rates rising aggressively, despite a possible oncoming recession. So we've had especially tech go crazy over the last half a year, I guess. So they're due a pullback of some sort before making the next move higher. What I'd also touch on the short term, which is an interesting chart. If we take a look at Bitcoin's move from the start of the year, every move higher, okay, we generally get a correction. So we get a consolidation phase, which moves lower before the next leg to the upside. And if we plot the Bitcoin chart against Bitcoin's long to short ratio, which is the ratio of buyers to sellers on Binance, we can see that the retail market generally gets bullish on Bitcoin slightly too early. So they're buying at these peaks. And once the market has gone down and liquidated those long positions, we then get the retail market switch to short. So they're net short in terms of the long to short ratio. Once they've switched from being bullish to being bearish on the market, that's when we generally see a move to the upside in the price of Bitcoin. So generally retail traders are wrong, and generally they're too early to the market. So we're seeing this happen during the last 2 moves to the upside. We get a bullish move higher. The market becomes very bullish. We then get long liquidations. The market becomes bearish, and then Bitcoin thrusts to the upside. We're seeing something similar play out now. It's still early, but we've had a number of long liquidations during this consolidation phase. We're seeing the long to short ratio on Bitcoin decline aggressively, similar to the last 2 moves. So once we get down to that kind of level 1 area, I'll be possibly looking to go long as a contrarian investor in the market.
Yeah, I'm gonna show you also something interesting. When we look to the 30-day average of the volatility, everyone is talking about that. You see also when we look in the years, in the previous years, like 18, 19, 20, yeah, we are on very low levels. If we look to the annualized Bitcoin volatility, and because of that, there is some expansion ahead. Upside or downside, we don't know, but I think it's very nice in combination what you told here. It's when you combine the 2 charts, yeah, it's obvious that we're gonna see higher prices maybe when we break to the 31 level. where we have an important high on the Bitcoin USDT chart from Binance. But yeah, if we break the trend line, the macro trend line, macro support trend line, yeah, we can also go to the 25 level. We will see. But I think that that we're gonna see this year 34, 38 when we see that expansion to the upside. That's my opinion.
Yeah, I don't disagree. I think at the moment, volatility is being compressed to near record levels. So you're seeing, the market's literally just moving sideways. And yeah, there's going to be a very sharp, aggressive move very soon. But whether it's bullish or bearish, all we need to do is gather evidence and support for either a bull or a bear scenario and try and make an educated decision. So, looking at the majority of the charts, I think you're trying to piece together bits of the jigsaw to make an educated decision. The majority of the charts are suggesting that Bitcoin is on track with its usual cycle. Doesn't mean it's going to go for a straight line higher, but it's in an accumulation phase at the moment. So there's going to be some chop. There's going to be some difficult trading conditions until a clear trend is intact. Another interesting chart to look at when you're looking at Bitcoin is
another question before we go further with that.
Sure.
What do you think when we look to the risk-on assets or the indexes like the S&P 500 and we look to pre-election years, like Benjamin Cohen also said, we see lower prices. What's your opinion about the pre-elections? Do we need lower with Bitcoin because we see it before, or is it not necessary?
From my experience, a pre-election year has historically been positive for risk assets. So I think I haven't got the data to hand now. Maybe we can look at that next call, Tim. But
yeah, perfect.
Yeah, historically, pre-election years have been favorable for risk assets. Okay. So I can probably dive into that more during the next meeting, Tim.
Perfect. Okay, thanks.
This is what we call the MVRV Z score. Okay, so we have obviously the price of Bitcoin, and we then have the MVRV score below, which is scaled from 0 to 10 on the right-hand side. Historically speaking, a spike towards the 8 to 10 level has indicated a major market top in a cycle, and a move towards the 0 level has historically signaled a bottom in the Bitcoin market. So what we can see here is the last bear markets, we've had a move down into beneath 0. That one's down to minus 0.45 before breaking above the green line, and that signaled the start of the new bull market. And that's occurred on each of the past 3 bear markets. So we get a move out of the green zone, and that signaled the start of the new bull market. So, Bitcoin's up, or was up 100% from its lows back in November 2022. We've had a move out of the green zone. So that's signaling the start of the new bull market. Very nice, clean, easy chart. If you're following, I guess when you're investing, you need to leave your emotions aside and use charts to help you perform decisions. And this would also suggest that, Bitcoin's moving out of the accumulation phase into a bull market.
Yeah, indeed. And what it actually is, because the people that looking, they know the chart. There's a market value, realized value. But what it is actually is, I look at to the MVRV Z score like a deviation tool of the realized price. It's actually nothing more than that. And you see also when the prices, you have the blue line, when the price go beneath the blue line, it's actually the best moment to accumulate. And you see also the same pattern in the green zone then. And if we have a big deviation to the upside with the price and the realized price, yes, you see that peak, and that peak is actually the hot zone where we must take some risk off and take some profits. And it's nothing more than that. It's simple, but simple is the best, in my opinion, to do some portfolio management on Bitcoin. And if Bitcoin has a hot zone, yeah, I do the same with other coins, because it's if Bitcoin goes hard down, yeah, the other coins will also do. And it's actually quite simple to manage a portfolio in that way. Nice insight.
It's not a trader's chart, but it's an investing chart. You know,
Yeah, yeah.
if you look at the Bitcoin cycle, you have maybe 2.5 years of a bull market phase.
Mm-hmm.
So this is simply a good chart to understand when to enter and when to exit the market. And then obviously you can then go down and make decisions into which altcoins you're going to start filtering liquidity into as well. I guess it's a very similar signal to the fear and greed index. You know, you're looking
Yeah,
for the extremes. You're looking for the extremely fearful points in time to accumulate, and you're looking for the extremely greedy signals to start taking profits off the table and securing some of your gains. So, you know, a lot of these charts on look into Bitcoin, you're really looking for the extreme levels of when to buy and when to sell.
absolutely. Yeah, indeed.
Outside,
The net annualized profit and loss is also a chart that is very interesting.
definitely.
On Glassnode, it's actually the same. You have it's like an oscillator converted in the emotions of the investors. And when you have the euphoria blue tops, yeah, it's time to scale out, or the green tops, it's actually the same. And yeah, when you combine these metrics or these indicators, yeah, it's quite obvious that you must scale out and scale in, but you must do it. You must take some risk that it goes, yeah, deeper maybe, but on the bigger time frame, it's a good investment period, and that's the most important, where investors must be conscious about, or yeah, must be how do you say it, interested about. That's the most important thing I like to say about that. Yeah.
Definitely. I mean, the cryptocurrency market is known for its volatility, you know, short-term movement, but really you're not looking for that short-term movement as a long-term investor. You're looking for a 2.5 to 3 year time horizon to accumulate different cryptocurrencies.
Yeah.
Out.
Perfect.
So I guess, you know, that's covering Bitcoin's halving event. Nothing, you know, crazy to that's changed, I guess, in the Bitcoin market. Another couple of charts that I wanted to touch on was Ethereum. So let me just load up a few charts, some bits here. Last time we caught up, we caught up and discussed the Solana chart.
Yeah.
Okay, and you know, we're seeing a very similar structure here on Ethereum, but I'm also going to go back in time to 2019 and 2020 to show a very similar chart or pattern that's unfolded prior to the last bull
Okay.
market. So
Interesting.
we had, you know, off the lows so far. So we had a low on Ethereum around 870. Okay, and that was back in June 2022. So Ethereum has actually bottomed prior to Bitcoin. Bitcoin didn't bottom until November 2022, which is
Mm-hmm.
very interesting. So we've had a possible five-wave rally to the upside, which is a 1, 2, 3, 4, 5 inside a leading diagonal. So this is potentially wave one up here, or
Okay.
a wave A of a corrective rally. Okay.
Yeah.
Now we've then had a complex corrective decline. We've had a higher low. So this would be known as an A, B, C corrective decline.
Okay. Yeah. I see.
We've then had another five-wave rally to the upside. So 1, 2, 3, 4 down, and 5. So this is either, let me just label this, sorry.
It's actually the Elliott wave theory. Yeah. You
Yeah,
show
correct.
show us. Yes.
So this is Elliott wave theory. So this structure is known as a 5-3-5 structure. So we have a 5 bullish wave rally to the upside, a 3-wave correction, and another 5
Ah.
wave
Okay.
rally.
Yeah. 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 5-3-5. The first wave is five moves. The
Yeah,
next wave is three moves, and then again five. Okay. I see. Yes.
exactly right. So either this is an A, B, C correction, which is a
Yeah.
bearish pattern, okay, or
Okay.
it's the start of a new bullish sequence to the upside. Okay, so this could possibly be wave one of a larger 5-wave sequence. And this is possibly wave one of a larger 5-wave sequence as well. And if I just go back in time.
Can you draw before you go to the previous? Can you draw the ABC that the people see? What's the ABC? I
Sure.
see it, but maybe with a bigger line or another color, that they see what you mean.
So this is an ABC here, pattern through here. Okay, so it's a complex corrective decline. Now, if we take a look at what's happened to Ethereum during the bear market, we had a large A, B, C correction. Okay, so a wave C is made up of 5 subwaves. A wave A is made up of either a 5-wave structure or a 3-wave structure. There's different patterns. And a B wave in here, this was made up of a 3-wave structure. And there was also a triangle pattern. So we had an A, B, C for a wave B. So after a large 5-wave rally to the upside, excuse the mess on the chart, so I'll make some sense in a second. We generally have a large correction. Okay.
No problem.
There is some method here to this madness. And I just want to show you an example. So the structure that we're looking at right now is very similar to the structure that unfolded prior to the last bull market.
Yeah, I see it.
Back in 2018, we had a 5-wave rally to the upside. So a 1, 2, 3, 4, and a 5 for a wave 1. Okay. We then had an A, B, C corrected decline for a wave 2. A wave 2 is generally a very steep correction, eliminates the majority of the gains made during the one rally. And then we had another 5-wave rally up. So 1, 2, 3, 4, 5. Okay. So during the last bear market, this is also a 5, 3, 5 structure. Okay. Before the bull market unfolded. And some Elliotians could have considered this to be a corrective rally, so an ABC rally. However, we then obviously ripped a lot higher, going into a major 5-wave structure to the upside. So 1, 2, 3, 4, 5 higher to form wave 3 on the primary degree. So I don't want to get into a major Elliott wave lesson right now, but it's a very similar structure to what occurred back in 2019 and 2020 during the accumulation phase to what's actually unfolding now as well. So we've had a 5-3-5 structure, and right now, I'm looking for long positions above the 2020 high. Okay, if we start getting above that level and we break the 2130 high, that's going to signal to me that we're going into a 3rd wave rally and a 4th wave, 3rd, 4th, and 5th wave rally to the upside.
And do you have any idea of some targets?
Short-term targets. So if we get above wave 1, let me just clean up some of the mess.
Yeah, sure, no problem. But it's very similar when you look to the 2 cycles. Yeah.
It's going to depend on where wave 2 has ended. Okay, so if we use wave 2 as the pullback around 1,600, okay, let me just bring these on. Initial targets to the upside or short-term targets, we could be looking around 3,300 as a 1.618 extension. So if this is wave 1 through here, wave 3 should minimum reach that kind of 3,300 area. Okay, so that would be your short-term targets. Elliott wave.
Yeah.
I was going to say Elliott wave. There's generally fractals of waves inside waves. So you can go down to the charts, you can go down to the 5-minute charts, and it kind of continues forever. Once we get above that 2,000 level, then hopefully we're looking for a move into that 3,300, 3,400 resistance level.
Okay. Can you zoom in on to the left when the high before the bear market happened? I can see some supply zones maybe, and maybe it can align with the levels you put with the Fibonacci level. When you zoom in, I can see that maybe.
Through 3,500, 3,200.
Yeah, can you zoom in on that point? Yeah, because it's very wide. Yeah, you have there also a lot of supply zones because you have bearish engulfings also. Yeah, it's also a very important level. Old highs are always important. Yes, you there, and a little higher also. That you see that it's very aligned with the levels you put on the chart with the Fibonacci. Yeah, it's nice to see, and we see yeah, you see it here. You see also that Bitcoin, Ethereum is a little bit behind Bitcoin always. Bitcoin did this move before Ethereum, and since then we are waiting on Ethereum to do some nice movements to the upside. Yeah, it's very interesting. But when I gonna show you something, Anthony, on my chart, I did also some interesting stuff to give additional charts. When you look to this, it's the logarithmic scale of Ethereum. And when you look on the monthly, it's a high time frame, I know. But when you look on the monthly and we put the lows together, you see that we are in a wedge. And my story about that is actually, I think we're gonna hover within that wedge, the upward wedge, or how do you say it, ascending wedge it is, I think. Yes. But I think the last bear market, Ethereum did pretty good. It was not that bear market that we see a couple years back with the ICO. It went not that hard to the downside as the previous cycle, but I think it was because of the locking of the staking that people had no possibilities to sell. But now the staking it is possible to take profit on that because of the upgrade of Ethereum. And I think next bear cycle we will break that wedge that you see here. And I think then we will see a very hard bear market for Ethereum. That's my opinion. I think we're gonna see something like this. Where can I... you have here some... Yeah. That we gonna bounce. That we gonna bounce. That we gonna bounce to here. You have here a supply zone. That we gonna do some corrections lower to this line maybe. It aligns very nice with the lows of this this period. And from there I think we're gonna do something like this. I think Ethereum will hit like 13 in the bull market, but when we had some bear market stuff, maybe when we break this line, we get some extra reaction, like we see like we saw with Bitcoin this cycle. Bitcoin went also to 20k. It never happened. Previous all-time highs hitting, but I think next bear cycle for Ethereum we can hit previous all-time highs as support. That's my opinion. Maybe I'm wrong, but I think the next bull run, it's very important to take profits on Ethereum. That's what I see.
It's definitely possible, just because if we take a look at Elliott wave, if that high is the new, if that high is the last high of the fifth wave cycle, that would also suggest that a larger correction could unfold as well. So that definitely could be a possibility if we come to the top of the peak of the fifth wave in the primary cycle of Ethereum.
Okay, perfect. Okay, up to the next. The The next was Solana, I think, an update about Solana.
Yeah, let's. Can you see my chart still?
I'm gonna add you. Yeah.
So last time we spoke, I believe Solana was trading probably around, I think it was 19, 18, around this kind of area.
Yeah. Yeah.
And we was considering a move higher into the 41 resistance level. I believe we said around that sort of 41 to 67 level. So we've had an initial move higher, and this move here is, at the moment, it's either a wave 1 or a wave A, B, C correction for a wave 2 or a wave B. And we're now going higher, and this would either be a wave 1 on a smaller degree, or it could be a wave C to end a corrective rally to the upside. So we now need to give the market some time for the price action to unfold further. But if we get a break above 31, that's really going to signal that we're going to be going higher in 5 waves. So essentially what that means is we should see a considerable amount of upside once we break that 31 level, because we've now had a wave 1, possibly a wave 2. And if we start building to the upside, I could quite easily see that going into that kind of 60 to 70 range for a wave 3 rally. You must remember as well that wave 3s are generally the most impulsive and most aggressive in Elliott wave. So they generally move further than wave 1. So if we do move into a wave 3 rally to the upside, then that's obviously going to be very bullish, and it will signal the start of a new bull market for Solana. On the downside, we have roughly 13 as my bullish invalidation level. So if we break below the wave 2 low, it's going to signal continuation lower, which would mean we should break the $7 to $8 support level as well, if it does breach sort of $12 to $13.
Yes, but what you see there is also a liquidity grab to trigger some stop losses. It's like sell side liquidity, I think, or buy side liquidity.
Yeah, definitely.
But there is a lot of liquidity. Our target is the most important target is above 48. If we get above that target on the weekly chart, if we close above that figure, we can go higher, like you said, 70, 80 level. I'm also very bullish on Solana, and what you here see on the daily is actually ranging and accumulation is consolidation, and after consolidation it's simple, you have expansion, and I think that's the thing we see now, and because of that I think also we're gonna break that important level of 31.
Yeah, I agree. My preference is to favor a wave 1, 2, 3, 4, 5 higher. This looks very bullish through here, and the ABC correction is near perfect in terms of what you look for in Elliott wave theory. So this ABC correction looks spot on. It's come down into the golden pocket, 61.8% fib retracement. There was obviously a liquidity grab through to that order block around $13. And we're now moving higher. So it's made its first high above the wave 1 rally. So this through here, I'd like to see an ABC correction, and then I'm going to be looking to build longs at the 31 level. On the weekly time frame, we can see some tweezer bottoms on this correction, which is generally an indication of a move higher. It's also coming through at this kind of new support level, which was previous resistance. There's a lot of support coming through here. You can see there's a number of touches through May and also through March. So a lot of support coming through here. If we can hold 23, then it's looking very favorable to a move to the upside. So I'm also very bullish on Solana, but I'll be looking to go slightly heavier and more aggressive once that 31.77 resistance is taken up.
Yeah. I can give you some additional insights. I will show you. You see here also the monthly. When you look to the monthly, we have I think it's the 50, I think. I'm gonna look. I'm not sure. It's the 200 is the 50. Yeah, it's the 50 EMA on the monthly. When we look to the dynamic range analyzer, it's actually our support and resistance. This is the most important level we see on the monthly, also on the weekly. And when you look on the daily, it's actually very simple. You had here, maybe I can show the supply and demand. Yes. That's actually, it's nothing more than that. You have here the demand zone. We go for that liquidity grab because we didn't retest this demand zone, and from there we stay above the equilibrium of the range, and from there we hit the 50 AMA. I think this is a very hard supply zone, and because of that we need above that 48. When we go above on the monthly or the weekly above the 48, we can go to the 100 level easily because we have a very nice disbalance here, and because of that I think that's a very considerable level to hit. On the daily we had also a very nice liquidity grab. When you look, I'm gonna see, you had last chart was about the daily, I think. Yeah, you see it here. We had you spoke about the daily on the chart from Solana.
The weekly chart, and it grabbed the liquidity around $13. So it was the previous.
Yeah.
It was the previous.
Okay, that was what I saw on your chart. When we take the 50% level, we hit the Fibonacci levels from this disbalance. We hit perfectly the 79 level, and from there we went to higher levels. This is very interesting. We broke also macro trend line. We hit it. The support trend line, when you zoom out, you see it like this. We had here the first low, second low, and then a new higher low, and that's actually, it's a very healthy price action of Solana, and very bullish in my opinion. Very bullish. We need actually to break this. This supply is very heavy. It's the same supply issue that we see on Bitcoin. it's always the same. Also on Ethereum, I think Ethereum will break earlier than Solana, but when Solana hits that 48 level, we're gonna see nice upward movements, I think. Yeah,
I also think the rest of the market agrees with the bullish outlook for Solana. I touched on the institutional inflows into Solana, and they've been positive, weekly, month to date, year to date as well. One of only 3 altcoins that have done that. Bitcoin has negative flows month to date, so Bitcoin hasn't even done that. So you have XRP, Solana, and Litecoin, clearly the top 3 favorites in the altcoins at the institutional level at the moment.
Okay, perfect. Do you have no other charts to show, like the DXY? It was also a nice one I saw in the script we made.
Yeah, sure. Let me get the DXY chart up.
I will add you back to the stream.
So the last time we spoke, the DXY was just breaking down from the previous support level. I believe it was around 101. So, I was initially suggested that around 98 would be the target to the downside on the DXY, which was going to be the 200-day moving average. We've seen a very sharp reversal on the DXY. It's now coming back up to, I guess, retest broken support. So we have a bit of resistance now coming through here. What I would say is, if the DXY breaks the 103, this high through here, let me just zoom in.
The only thing I see also, it's on the weekly. We see also very low RSI. What do you think about that?
It is low, but there's periods where it's been low before, it has a pullback, and it can go down again. So
Okay,
you know,
yeah, I see.
RSI, I tend to only use it when looking for bullish and bearish divergences. Okay, so you can see a bearish divergence on the DXY, the top. Pick the top in the market perfectly just based on a bearish divergence on the RSI. Same with the bullish divergence down the bottom. And we had a bullish divergence whilst the DXY was making new lows, indicated a reversal in the market. And same over here as well. So, there's not been a bullish divergence. We're just seeing a retracement at the moment. The DXY has come off massively from its highs. If it gets above 104 and it creates a new high, a higher high, then we may see obviously a continuation to the upside. So on a positive note, the cryptocurrency market has held up well despite this large rally in the DXY.
Yeah, indeed. Surprising, actually.
You have to consider what's happening across the market at the moment. So has the Federal Reserve done its last interest rate hike? There's inflation's come down further in the US. However, that's not necessarily a positive sign for the stock market. Historically speaking, the stock market doesn't bottom out until the Fed begins easing and cutting interest rates. So because the S&P 500 is yet to make a new high, this still could be classed as a bear market rally in the stock market. Okay. So there's still, caution to be had in the stock market because historically speaking, the stock market continues to make a new low until the Fed starts cutting interest rates, which they haven't done yet. But going into 2024, we're expecting the Fed to start tapering off their interest rates depending on economic data. So it's definitely one to watch. And that's probably why we're seeing a rotation into the DXY, because now the Fed are possibly going to start easing off rate hikes. And we now have to deal with the fact that there might be an oncoming recession. And if we take a look at one of the charts I shared on LinkedIn, there is now roughly a 70% chance of a recession in the US, which is predicted by the Treasury spread by June 2024. It hasn't been this high since 1983. So generally speaking, this chart has forecasted a recession in the US. I guess it's very similar to the inverted yield curve, which has had a very high track record. So we're now looking at the fact of a possible recession next year. The Fed may need to taper off interest rates depending on economic data and how bad the recession is. Will they slash interest rates? So I think the market is getting slightly nervous, and we're waiting to see if the Fed is going to try and acquire or try and create a soft landing, I guess.
Yeah, indeed.
That's the main reason I'm seeing a bit of a rotation into out of risk assets and into risk off assets like the DXY at the moment. So where the cryptocurrency market is at the moment with Bitcoin, Ethereum, and even Solana, it's just a game of being patient at the moment. We need to see if the DXY is going to cool off and reverse lower. We need to see if Solana breaks that key level. We need to look at Bitcoin to see if that breaks 31,000. We need to see if Ethereum breaks 2,100. Once we get past those key levels, it should signal a continuation to the upside and to the downside for the DXY. So just a waiting game at the moment.
Yeah. But at the end, do you think my worries are actually when we hit a recession? I think first of all there will be some panic on the markets overall in general. I think we can see like a V correction on Bitcoin in the first 2 weeks maybe of the first week, and that we can then get that liquidity grab or that retest of a support zone, important support zone. Do you think the same, or do you think Bitcoin will not move and consolidate further and go higher when everything is stabilized?
So I think with a recession, it's not. I wouldn't class it as a black swan event, because it's not just one day a news event happens and says we're now in a recession and the economy stalls. It's a gradual event that happens over time. GDP growth rate declines gradually over time. Unemployment starts to rise. So it's kind of like a gradual event that creeps up on the market. However, what you also need to factor in is, let's say we do move into a recession, unemployment increases, we have a number of layoffs, maybe companies go under. What the Fed may need to do is obviously turn on the money printers and provide liquidity to support the financial market, which is generally what they have done in previous recessions and bear markets.
Yeah.
If we're then looking at the M2 money supply, or the supply provided by global central banks, it has historically always increased. There's never a prolonged period where
Yeah.
so, you know, if we consider that they're going to continue printing at some point in the future, if we look 5 years from now, these assets should be higher in value if we're looking at Bitcoin, just based on the fact that the central banks will continue printing money at some point in time.
Yeah, and the devaluation of the dollar, because of that, prices go higher on assets like stocks, and yeah, indeed.
The dollar's lost 92% of its purchasing power, I believe, since the 1930s or 1920s. Bitcoin's had an annualized return of 150% since its inception. So, you know, adding Bitcoin to your portfolio and just holding for 2, 3, 4, 5 years is only going to be a positive for your portfolio.
Okay. Another question on the side. What do you think from the president candidates? Do you prefer some candidates that are important to become president in our favor then? In the crypto sector's favor?
So I was trading the markets when Trump became president, and not that I support his views and who he is as a person, but he was good for the markets from a trading perspective and the investing perspective. You know, if you're taking a look at the individual candidates, you know, Kennedy is someone that I like his values and his views. So, you know, I'm not supportive of Democrats or Republicans, but there are some individuals that I do like. There's a couple that obviously support Bitcoin and cryptocurrencies. So having someone as the president that supports the Bitcoin market or the cryptocurrency market would be crucial as well. I only see that as being a positive.
Yeah, and what do you think about his idea to back the dollar with some assets like gold, a little bit Bitcoin, to get a bucket of hard assets actually to back the dollar? What's your opinion on that idea of him? Is it possible, or will it be just a marketing stunt like some people say?
You know, I'm not an expert on that area, so I can't give too much insights into backing a currency with commodities.
Yeah, okay, I understand. Yeah,
there's a lot of rumors coming out about BRICS and their currency that's going to be backed by gold or Bitcoin. So I think with the amount of speculation that's coming out and the de-dollarization that's happening globally, if the US wants to stem the bleed and do something supportive of the market, maybe they do need to bring out a commodity-backed dollar to reinstate their I guess their dominance and people's faith in the dollar as well.
Okay, thanks. Do you have other charts to show, or is that the main thing you want to show us?
That's a few charts there, Tim. So I think for today that's it.
Yeah, okay, perfect. Do you mind if I give some additional charts? I have 3 additional charts that are very aligned with your thoughts and analysis. Yeah, okay, let's go. We see here actually the total. The total is included with Ethereum, altcoins, Bitcoin. You have everything. When you look to I'm gonna put off the dynamic range analyzer. This chart layout is actually meant to draw only trend lines on the logarithmic scale. Why trend lines? I see trend lines like the retail dots. The retail always draw trend lines, and when you have mass retail that trades, you're gonna see some movement when we break out some macro trend lines. But I had some very interesting lines on the total. When you put these two together, you have, I'm gonna show you with some arrows. You have here the first drop, you have here the second drop, and then you see when we want to stay above this line, we go beneath this line, and then you have actually the resistance. And this resistance, we hit it now back as a support. Dus we went above it, we had some consolidation, and this resistance is now back support, and that's very good. And when we draw another trend line, like we learned, you have here the first source point, or how do you call it, source point we will call it. You have here the second support, and now you see we hit some nice support on this candles and also on this candles. This is on the 2-week base, and because of that we are very near on the support. We must see some movements on the overall crypto market to attack this line here. This line is very important. The 1.18 trillion, it's for in Nederlands is 1.18 biljoen. A lot of people think it's also trillion in Dutch, but it's not true. It's biljoen in Nederlands. But this is very important to show, because we have here support. And when we break this support, I think maybe we're gonna see a retest on this trend line. That's a very nice macro pivot point, actually. That's my opinion on the total 3, but I can be wrong. Don't shoot me if I'm wrong. What also is very interesting to see your opinion about Ethereum, that we can go higher, is also what I think. When we look to Ethereum, BTC, it's very juicy. It's very juicy because I draw some trend lines. You see here a descending wedge. Descending, I think it is. Or right. Ascending. Descending. Descending. Yes. Here you see also that this is a very important level. This high we draw, this liquidity gap, we went above it, but it was not strong enough. Then we had the next move to the next trend line. Yes, you see it, very nice. We hit that, and from there we had some liquidity that was in this candle, and from there we went up back again to to a new high, the previous high, but now we are more in the downside. But this is actually very bullish. When we can break this line, we can see some expansion to the next trend line, and that's this one. I think we're gonna see something like this. It's just on trend lines based. It's not with the supply and demand zones. It's totally different what we used to. But I think maybe we can go like this, like this, and then we're gonna see some supply here. You have here also a bearish engulfing, bearish engulfing, bearish engulfing. There's a lot of resistance here, but when we break this level, we can see some stuff, or some price movement on the ETH BTC to this line, I think. And then we're gonna see this support line, and then we have some squeezes, and then we can go further above. I think it's now more Ethereum time than Bitcoin time. Also with some rumors of Ethereum ETF that some companies filed for. I think there is a lot of bullish factors for Ethereum also. When we look to Bitcoin USD, we see also this trend line is very important. We had here a trend line, and it was I combined it with the high of this, and we see that we hit it nicely on the weekly. This trend line is very important to hit, and I think to break. And I think when we break this trend line, we can go to this trend line. It's also nice and aligned with the supply zone that we see here. I'm gonna show you. This supply zone is for me important, and when it hits when we have the point of hitting the boat lines, we see it's August 12, 24, maybe. I think we will go higher. We will get some expansion here, but here's a consolidation phase, I think, for Bitcoin. That's my opinion. I think this year we can hit this level, 37, and I think in 24 we can hit this level. That's what I think, but we will see. Time will tell. But yeah, technical analysis are nice to do and speculation also, but when you can combine it like a special guest as you, it's very nice to share opinions and thoughts about that, and for sure when you see it's very similar to each other.
No, definitely. It's always good to share charts, have a look at what other analysts are doing in the market, take a look at the longer term view of the Bitcoin market, the spiral diagram, to understand that we are still in the correct trend going into the halving event. And then from there, you can go in and form some more short-term decision makings as well.
Yeah, thanks. Okay, I think we said enough. We spoke to like an hour. It's perfect for the people to watch. I want to thank you for your presentation and your expertise. And hopefully we can do another call within a month for new updates from your side.
Brilliant, Tim. Looking forward to it.
Okay, thank you. Bye, Anthony.
See you guys.